Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Paul Sweeney, along with Tom Keene. Join us each day for insight from the best in economics, geopolitics, finance, and investment. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show. Weekday mornings from 7 to 10 Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And as always, on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Let's check in with somebody who knows what's going on out there in the markets. Kristina Hooper. She's a chief global market strategist for Invesco. Kristina, it's been a busy week here. I mean, we've had a lot of central bank movement here. We've had a lot of IPO markets or activity in the markets as well. Let's start with the Federal Reserve here and some of the other central banks, quite frankly. What did you take from the Fed and the other central banks' commentary this week?
Paul, we are headed to an easier environment for monetary policy. And as I think you know, I've been a big believer that monetary policy has and will continue to drive markets. And that's why I think we've had such a good week, even in terms of IPOs. Sentiment has gotten more positive because we know the end is in sight and that we're going to start to see rate cuts. In fact, the Swiss National Bank gave us a nice surprise this week, our first present from major developed central banks in terms of cutting. But this is just the beginning. And this is so different than the environment we saw in 2022, where we had surprise rate hikes, a whole flurry of them, so much so that the World Bank warned in September of 2022 that this synchronized tightening was something we hadn't seen in many decades. Well, now we're getting to see what I think will be synchronized cuts over the course of this year, which should be very supportive for markets.
Yeah, could you talk a little bit more about what you see as the markets play here? Because we've talked so frequently on this radio program about how frothy equity markets are getting. So where does an investor go here?
Well, I think an investor needs to be well diversified. We shouldn't ignore the U.S., but we do know that valuations are much higher here than elsewhere. And so this is a great opportunity to sharpen pencils and look around the world for potential. And that potential can come from Japan. Interestingly, their central bank is in a different place, just beginning tightening, normalizing monetary policy. But that is a vote of confidence in the Japanese economy. And I think will really spur attention, more investor interest in the Japanese stock market. Emerging markets, valuation opportunities abound. And in particular, Asia EM looks attractive right now. There's growth potential there, as well as valuations, and again, supportive monetary policy. We're likely to see a weakening U.S. dollar, which should help going outside the U.S. But again, there's still opportunity in the U.S., so investors shouldn't ignore it. And I shouldn't be just talking about equities. There are opportunities in fixed income. We're in a different place than where we've been for years in terms of yield. We had lived in a yield-scarce environment. We're not there. I wouldn't say it's a golden age of fixed income, but fixed income looks very attractive. And there are a whole variety of areas that we can choose from to make a diversified portfolio. Investment grade credit looks very attractive to me, but certainly opportunities in emerging markets, high yield municipals. Again, there is so much in abundance. So if you think about 2022 as an annus horribilis for markets, I think that it's something different, very different today, and much better environment.
That's kind of wanted to go to fixed income because I'm wondering, I'm just looking at my screen here, Kristina, and I can just go over to a 2-year United States Treasury and get 4.6%. That seems pretty darn good. I mean, is that the trade in fixed income, or do I try to take some credit risk here and think about investment grade credit, or maybe even what really has been the best performer in fixed income, which is high yield? How do I think about credit risk?
Well, I'm a big believer in diversification and thinking for the longer term. I don't think it should be about treasuries. I think there's a lot of opportunity moving out on the risk spectrum. Investment grade credit to me is a sweet spot, but certainly high yield has been a strong performer performer. And given what we're seeing in the U.S. economy, how it looks like a softer landing than we had expected, I think that makes the case for moving out, having exposure to high yield. And also don't forget munis, where there's some very attractive yields right now. So there is a lot of opportunity. And of course, don't forget emerging markets debt in there.
Is there anything that you like in particular in emerging markets? I mean, you mentioned earlier Asia, but anything in Latin America, anything in Africa?
Well, certainly Mexico benefits from a U.S. economy. And so I think what we're going to see in the U.S. is a pleasant surprise this year. I've been a believer that we'd see a bumpy landing. I don't think it's going to be as bumpy as I had anticipated. And that should be good news for a country like Mexico.
All right, Kristina, thank you so much for joining us. Kristina Hooper, she is the Chief Global Market Strategist for Invesco. Big week in technology. Let's get a couple of our top technology analysts. We got them together here. Anurag Rana joins us via Zoom from Chicago. And Mandeep Singh, he's here in our Bloomberg Interactive Broker studio. Anurag, let's start with you here. I want to start with Apple here. I mean, the more I read about this, I'm just, about Apple facing these antitrust suits, both here in the U.S. And abroad, have some regulatory challenges. I'm not sure if this is a Microsoft thing from kind of the 90s, whereby I was kind of casting a pall over the stock that it just couldn't get out of, or is it something that this story can power through? What's the early read when you talk to investors these days?
Yeah, I mean, I must confess I was surprised by the stock reaction yesterday. I mean, everybody knew this was going to happen, so why the surprise? And that was a bit confusing. But having said that, Apple generates so much free cash flow. It is truly the behemoth when it comes to their operating system, and people are taking shots at it. And this is not going to end, and it's a big overhang for the stock over the next several years. This is not going to go through in the next 6 months or 12 months. This is a multi-year problem now.
I guess, Mandeep, could you talk a little bit about another issue that Apple's been facing? It's had a string of pretty bad news about where it is on AI. We have these headlines that just have crossed that Apple's in talks to use Baidu's AI in its Chinese iPhones. We had the scoop earlier about the potential tie-up with Google for AI. I mean, it doesn't look like it's really anywhere in the thing that is most hot among investors.
I wouldn't characterize it that way. I think in the end, Gen AI is still so early that, when we think about who is the real beneficiary, obviously it's NVIDIA. And when it comes to on-device Gen AI, which is where Apple plays in, nobody is a standout. Yes, Google has a model, and obviously Apple is talking about leveraging Google Gemini. But maybe it's a sound strategy to have a Chinese vendor provide the LLM for the Chinese phones, because when it comes to LLM chatbot functionality, it's all about the local language, the local knowledge that the LLM embeds, and it may actually turn out to be a good strategy to use local LLMs wherever Apple has an install base.
LLM definition, large language model, which I know that because I read the research coming from Mandeep and Anurag. Anurag, another Apple issue here, and then maybe we can broaden it out a little bit, but again, I think I probably speak for most Apple investors, is I'm still trying to get my head around China. What is the risk there for me, China, both from a demand for my products in China and maybe to a lesser extent the supply chain, but that supply chain issue is still on the table. Where are you? Yeah. Where's the street on kind of sussing out the China risk for Apple?
So when you look at Apple, let's say over a 10-year history, it really made inroads in the U.S. and the Western world, controlling market share, but the next big market is China, and they were doing well. The Xiaomi phone came out last year. It really underscored that there was refresh cycle for that particular phone that hasn't happened in years. Consumer weakness in China, and Apple's just losing market share at this point in terms of every quarter when they come out, and it's been a very tough market. I don't see that changing, at least this year. They really need a catalyst to really go out and say that we can really work in China. Maybe the LLM, maybe the partnership with Baidu is one of them. But having said that, I don't see any chances that they're going to have a big rebound in China, at least this year.
Broadening it out a little bit, another really big tech story this week is the Reddit IPO. I mean, that's gone incredibly well. Mandeep, can we start with you just to talk about what your read is on how enthusiastic investors have been for this? And do you think that this is really an AI play? Paul is skeptical.
So, as I mentioned yesterday when I was on your show, that Reddit has got something unique when it comes to the user data and, having the wide breadth of online communities. And that is, I think, really something that stands out versus other social media platforms, which are far bigger than Reddit. So the criticism that I get from investors is it's an 18-year-old company that it's not profitable. And for the first 10 years of its existence, it didn't even have an ads model. So it's really in the last 5 years they've started layering ads. And the IPO is coming at a good time with this whole Gen AI wave because everybody needs to train their models. And if you're looking for text corpus, Reddit is the go-to place. So to my mind, any product with stickiness where users come to your platform every day, and in Reddit's case, they need to boost their daily active users. Their monthly active users is far higher than their daily active users. If they're able to execute on that, I think they'll do quite well in terms of the first 6 months of the IPO.
Yeah, and you were dead on yesterday. You were bullish yesterday. You were against my skepticism here. Stock rallied just big time there. So good news for the Reddit folks. Good news for the IPO market. Even after we had that Astera the day before, also a big AI play, and that stock is trading really well in the IPO market. Hey, Anurag, I think, the name that I know you've been pounding the table on a lot is Microsoft here. What's the latest call here on Microsoft? It's still firmly in that magnificent, I don't know whether it's 5 or 7, what it is these days, but what's the call here?
I think in the software world, if you want to just pick one company that is truly exposed to AI in the most direct way, it is Microsoft right now. And I don't see anything changes. I'm actually surprised they can go out and pay $615 million and hire so many people and nobody says anything about it. I mean, maybe this is the new way of acquiring companies. It is remarkable the amount of money they're spending on expanding their data centers for cloud as well as AI. I see them, differentiating their moat compared to others over the next few years.
But I guess one thing, can I just keep with this point, Anurag, because with Microsoft, they're spread across so many different areas. I mean, you start to feel like that old antitrust sort of vibe is starting to come back for Microsoft, that regulators might start getting really, really worried.
Yeah, as soon as you get a decent amount of free cash flow, you will see the regulators come in. But this is nothing that they haven't dealt with in the past. There is not one tech company right now that's not dealing with them, and I don't think that's going to change.
The stock's up. First of all, it's a $3.2 trillion market cap company. Just amazing. Year to date, the stock's up 14%. Trailing 12 months up 60%. PE on the June 24, it's 36 times. But a lot of folks will tell you, hey, we'll grow into that. All right, Mandeep, you cover so much in the tech space. What's your top idea here? What are you guys talking about the most these days?
Right now our top focus idea is Alphabet, because all the criticism they've been getting and the fact that
Google.
Everyone is talking about them losing share in search. We got one validation that they are no more behind in terms of large language model race, with Apple considering, Google Gemini to be the model and not OpenAI or any other models out there. And look, when it comes to search, I think Google has the best platform when it comes to ad tech. And time and again, we see that, with other social media platforms, they're not able to monetize their user base and engagement as well as Google does. And you see that with Reddit, you see that with Twitter. That's why Google search is so unique, because they are able to monetize it far better than everyone else. So I'm in the camp that they will hold on to their search share. In fact, the search market will grow as a result of the large language models, and Google will be a beneficiary.
All right, Google, GOOGL is a ticker for the pros out there. It's got a market cap of $1.8 billion. The stock is trillion. Thank you very much for that correction. Thank you. You even beat out Rich Truman on that. Stock's up 5% year to date, up 42% trailing 12 month. Anurag, Rana, Mandeep, Singh, a couple of our top leaders in technology research for Bloomberg Intelligence. They drive the business. Let's talk energy here and sustainable energy. And to do that, one of the folks we like to check in with is Jonathan Maxwell. He's the CEO and co-founder of Sustainable Development Capital. The name says it all. He joins us here in our Bloomberg Interactive Broker studio. He's also the author of a new book, which I will plug, The Edge: How Competition for Resources is Pushing the World and Its Climate to the Brink. and what we can do about it. Jonathan, thanks so much for joining us here. Didn't we have President Biden and the administration do something with liquefied natural gas, and people in the energy patch aren't so happy about it? What's going on there?
Yeah, so a couple of weeks ago, there was a moratorium on exports, new export licenses, though, for export of liquefied natural gas to Europe. I mean, putting this into context, Europe's had to scramble for gas after Russia's invasion of Ukraine. And where do you get it from? Well, Qatar, Norway, but actually one of the biggest, if not the biggest exporters is the United States, right?
Texas, Oklahoma.
So now, having said all of that, we had an announcement this week from the White House to say, don't worry, it'll be within a year, we'll let these new export licenses come back. There is already, just to put this into context, about 50 billion cubic feet per day authorized. That's 3 times the level of today's exports. So this isn't anything to panic about in the short run. Now, this was dressed or explained as a climate initiative. Now, I'm in the sustainability business. I would love to think that. I'm also expecting, having said that some thought has had to be given to what it could do to US prices. Do you know how much more expensive it is to buy gas in Europe versus the United States?
A lot.
4 to 8 times on average over the last 5 years or so. And it's never really over the last decade been cheaper, other than in 1 month, which was in COVID when everything went upside down. So, this is a big issue for Europe. It's a huge opportunity for the United States to step into Russia's shoes here.
So if it's a huge opportunity for the United States, it does still seem to me that President Biden has just kind of completely undercut that potential advantage. Or am I missing something?
I think there's a moratorium. The White House has effectively said the moratorium is pretty short-lived, and it won't really affect anything in the short run. I think the bigger picture really for the US is it's an extraordinary energy position. It's energy independent. It's the largest exporter, actually, potentially, of oil and gas in the world. So this is quite a challenge, actually. This is now a big petrostate. What do you do in a changing environmental and climate world?
All right, so where at Sustainable Development Capital, where are you guys deploying your capital these days? Where do you think is some of the greatest opportunities?
So look, half of our investment, maybe more, is actually coming into the United States. So we invest in a different type of solution to everybody else, where most of the money's focused. This is big business. Energy is one of the biggest businesses in the world. $9 trillion has been invested in renewables. So if you think of us as somebody in the clean energy sector, you would expect us maybe to be building wind farms or solar parks and plugging into the grid. The place that we get excited, actually, is the customer rather than the grid. You're going to have to spend, California alone is going to have to spend $80 billion to build out its grid over the next decade just to transport the existing energy systems. If I told you, as I do when I come on your show, how nuts it is that in the United States and Europe, about 2/3 to 70% of the primary energy is wasted or lost before it gets to the point of use.
I never understood that again. So up to 70% of the energy produced just gets wasted. It goes up into the air, the atmosphere, and everywhere else.
Yeah, I'll unpack it very quickly, but because it is extraordinary. It's the biggest dirty secret of the energy sector, and I'll just unpack it again. It's why I wrote the book, actually, and had thousands of people read it. And if anybody would like to take issue with it, I'd love to get your email. So the biggest loss of energy happens actually in centralized energy systems. Gas and nuclear are 2 of the largest, other than coal, are the 2 of the largest producers of electricity, for example, in the United States. The problem is when you put either a gas molecule in a turbine or, frankly, nuclear fuel in a power station, only about half of it turns into electricity. What happens to the other half? It turns into heat. Now, if that heat is being produced very far away from the energy load, in other words, where the demand is, what happens to it? Well, not nothing. It just disappears into the atmosphere. Ultimately, the bits that do escape into space. They don't need it up there. So that's the biggest part of the loss. It's what they call thermal losses at the point of generation. The solution to that is to generate closer to where you need the energy, and then you could use the heat. But we don't. There are other bits of loss which happen. You lose about 10% on extracting and converting oil and gas, for example, into pipelines. Why do I talk about oil and gas as a sustainability guy? Because 80% of the world's energy is still fossil fuels, oil, gas, and coal. And then the last piece of it is transmission and distribution systems. Washington, I was there yesterday, and I'm unbelievably happy to see that they're looking on the demand side of this too now, because everything's been about grid. We need to invest more in the grid. That's just to get the energy from miles away into town. But do you know what? 5 to 10% of it gets lost through transmission and distribution systems. So you add it up, 10% plus 50% plus 10%. And the Lawrence Livermore National Laboratories numbers they produce every July show that now in the United States, 70% of primary energy is lost before it gets to the point of use.
That's an incredible statistic.
That's why we have this guy back.
But, I think, as I said, I was in DC yesterday. I'm not going to give away, particular confidences, but I think this is now the big story of the next decade. Here we've, what do we do? We've got...
Are there technologies to reduce that number?
Absolutely. Technologies that have existed for a decade that are cost competitive and that are cheaper, cleaner, and more reliable. I'll give you a few examples. In the United States, and we're one of the biggest investors in this space, rooftop solar and storage, carports where you can plug directly to the buildings, on-site generation. We run on-site generation for some of the biggest and most important steel mills in the United States. So not all of this, and that's basically using recycled gases. Same stuff, turbines and engines that people use to generate energy in the middle of nowhere. Instead, we capture the waste gases and we make energy for power and steel on site, cutting cost, carbon, and improving reliability. Data centers is a huge issue, right? It can't go a conversation without talking AI. I think it's impolite these days, so I'll do it. But that AI alone should be about 3% of global energy demand by the end of this decade, right? But how are you going to get the power to the data centers? How are you going to cool them? Did you know, by the way, for every unit you put into a data center of electricity, only 0.65 units of compute come out the other side? So this is the flip side of my point. Even when energy's got there, it gets lost at the point of use. So what do? You improve the mechanical and electrical equipment, better heating, cooling in the case of data centers, lighting. This is the biggest total addressable market in the energy sector, not actually about generating more, but wasting less.
See, there's somebody who actually does something for a living. My whole life on Wall Street, pushing paper around. That's not, these guys actually do stuff.
No, it's impressive.
I know. All right, so let's go over this again, folks. Jonathan Maxwell, he's a CEO, he's a co-founder of Sustainable Development Capital. He's also the author of this book, The Edge, How Competition for Resources is Pushing the World and Its Climate to the Brink and What We Can Do About It. This is the energy loss guy. He's my energy loss guy. I didn't even know that was really a thing, but it's a thing. Jonathan, thanks so much for joining us. Really appreciate it. Best of luck on that. Keep us up to date on what you guys are doing, what the investments are, and what our good friends down in Washington can do to help us. All right, folks, your daily look at the front pages around the world. Lisa, Mateo, what do you got for us from the newspapers these days?
All right, so it's Friday, right? So I figure we do a Getaway Friday, a little travel theme going here. All right, we'll start with something on Bloomberg. Boeing directors, they're planning to meet next week with top executives from some of their largest airline customers who are obviously frustrated for obvious reasons. One person who won't be there, though, sources are telling Bloomberg, it's CEO Dave Calhoun. So that's kind of interesting. I mean, they say he's supportive of the sessions, but he won't be there. Who will be there is Larry Kellner. He's the chairman of Boeing's board, three other directors. But it just shows that growing frustration that I guess people have with him.
Yeah, I feel customers. Like if you're not going to have the CEO there, what is the benefit? Yeah. What's the upside versus what is the message? Is there a sense that he'll do more harm than good? That he's not the one that people want to see because they're so angry? What's the deal with that?
Yeah, but I mean, it's a good. It is. You can spin it as a good optical issue here, which is the board going out to the big customers saying, "Listen, you have our attention here. You have our undivided attention. We're not coming here telling you anything. We're coming in here to listen. What do you need? We'll take that back to our management team. Maybe it's a good thing, but I don't know. It's just amazing how this has happened. I remember asking George Ferguson, who covers Boeing for Bloomberg Intelligence. He's covered the company for decades. He's never seen it like this, where there are so many quality issues here. So these are unusual times and maybe some unusual strategies here.
They're definitely going to get some unfiltered feedback,
Yep.
yes, you can say. All right, so have you guys ever lost your luggage when you've traveled? Have you
I
ever
don't check anything.
You don't check
I haven't checked
anything?
anything since like the 80s.
So you fit it all in a little bag?
I go to Europe for 2 weeks with a duffel bag.
Oh my gosh.
Oh my gosh, you're my hero.
Right, that's what I'm saying. Have you ever lost a luggage, Jen?
A long time
You
ago,
did?
yes.
Okay.
But I did get it back.
You did get, okay, that's the problem. So back in 2022, there was a rise in this, right? A lot of people started losing their luggage, so airlines started working to fix the problem. Most of them did better in 2023. This is according to the Transportation Department. 9 major U.S. carriers actually did better, except for United. They mishandled bags more than 11% worse than in 2022. But they still perform better than American Airlines, which is usually performing better. So they did worse too. A lot of people going using Apple AirTags to find their bags.
That's me.
That's what you use
Yeah.
too? You do use that? Okay,
Yeah.
so they use Apple AirTags. Allegiant actually performed the best when it comes to not losing your luggage. But this is all happening as you hear about, the airlines raising the fees for the checked bags. So it's kind of like you're losing them, but I'm paying more to check it. It's frustrating.
I don't know. On the apps now, at least on the United app, you can track your bag and see exactly kind of where it is.
Oh, can you?
Yes.
I didn't realize that.
Yeah,
Okay.
so that's kind of a new thing on the United app.
Oh.
So you don't need the AirTag.
So you don't
I would
need
still
it.
get the AirTag. though.
I would
Yeah.
trust the AirTag more.
Yeah,
You do. But does the AirTag take you actually to where the, I'm
It does.
wondering
It's on
how
a map.
precise it is.
It does. And I had
It's
mine.
sitting out on a tarmac in Newark. Okay, that's not good.
No, but that's how I managed to get my bag back when I had a delay because
With
it was
the
sitting
AirTag.
out on the tarmac and they're like, they're all here. I'm like, look at my phone. I can see my bag is on the tarmac.
See, so that does work. Okay, see,
Yep.
you solved it. All right. Here's something interesting. So you have, everybody loves the miles, right? You join the programs. If you don't have enough miles for a free flight, you can now borrow them from your kids. This is through a new program through United Airlines. It's letting people share their frequent flyer points with family and friends. So here's how it works. Let me break it down. So the group leader has to be over 18, but there is no minimum age for others. So that's how you can sign up your kids. So everyone in the pool has to have their own United frequent flyer account. People like, you have JetBlue, Spirit, Frontier, like the smaller airlines, they do this. They do the pooling. But United, this is the first major airline to actually do this. So
We've had the Netflix password thing, so the kids get booted off of my Netflix accounts because they've been mooching off me for years. Same thing for the United miles. I mean, I've been very benevolent with my miles with the kids, but I mean, I can't imagine a day when I'm going to get any of their miles.
I was about to say, I don't think they travel more than you do.
It's a two-way trip. Yeah. All right, that's good to know.
It'd be an awesome Christmas present if you're a little short of cash. Have my miles.
Right.
Oh, see, there you
Yeah.
go. Yeah, but it's true because a lot of people have been complaining about the miles, so this might be a little bit of perk. Finally, package holidays. Those all-in packages includes flights, hotels, transfers, food, everything. They're becoming the hot new thing again. Okay, apparently it took a hit because with the internet, people put their own packages together. It was mainly a baby boomer thing, but the younger travelers, they're starting to get more sophisticated. They wanted these offers and they want hassle-free vacations. They just want people to do the work for them.
Here we go. In September, going back to the motherland in Ireland, they can't wait to see me, by the way. So we're going to go over there, and we were looking at like, God, all the books, all the websites, doing all that kind of stuff. I'm like, we can't do this. We don't want to do this. We walked across the street and said, hey, here's how much money I have. Here's kind of where I want to go. And literally a half hour later, they came back with a proposal. Boom. I said, okay, done.
That is fantastic. That is the way forward. That is the future, i.e. let's not move beyond 1970.
It's going back to old-fashioned travel agents, so
Does it include the food and all that kind of transfer?
Yeah,
wow.
Yeah, it's a tour. So the only thing, so they book you on some schlocky seats on United, so I just use some of my miles to upgrade because, I'm not sitting in the back. You know me. I mean, please. So, but other than that, they took care of everything. And I think for some of the more advanced trips, it kind of makes sense still. I don't know. I'm not even sure what I paid for it, but in terms of a fee, but it was definitely worth it, whatever it was.
You'll be in Ireland. You'll go to a pub. It'll be fine.
Exactly.
It'll be
what
fine.
could go wrong?
I think it just makes sense too. I mean, just for families traveling, it's easier to have that all-inclusive, so you're not thinking about having to dish out cash and how much. Who I got to give this much to? It's just all taken care of.
Yeah, I should have done all-inclusive when my kids were little because when you check out after a week, you get a bill that's like 50 pages.
Oh yeah,
long because it's every smoothie, every beer, every soda, and it just kills you. As now you go to all-inclusive, you literally walk out the last day. You don't do anything.
You're done.
Boom.
You can even include gratuities in there if you want.
Yep. So anyway, different way to go. So, all right, good stuff there. Lisa Mateo here traveling. And between now and September, I don't travel anywhere because I'm at the Jersey Shore. People can come to me. There's no place in the world I'd rather be. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, geopolitics, finance, and investment. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show. Weekday mornings from 7 to 10 Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And as always, on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.